Hey everyone, it's Paul with your Tuesday video, and this week I am going to provide you a phenomenal, amazing update on what is going on with the stock market as it relates to us. And that means growth, innovation, opportunity, crypto-related stocks and issues. But before I get into all of that, very quickly do this, which is that this video and all of the content from our company, ATG Digital Media, is not investment advice. It is opinion, information, engagement, entertainment. Past performance does not equal to future results. Errors, mistakes, oversights, they happen. Capital loss is a potential and likely outcome when you put on any trade, speculation, or investment. So it is your money and it's your responsibility. Finally, I, the owners, contractors, employees, associates of ATG Digital Media, own, trade, transact in the investments that are mentioned in this video, in our model portfolios, in our updates, in my expos, in my Bald Man Speculating podcast, which is on Spotify, which you can check out. What else we got? We got Facebook, we got Instagram, we got my Substack. Oh, speaking of which, quick plug for ATG Digital Media, which is our digital media company that publishes all of those things. We have paid subscriptions that begin at $9.99, $9.99 for our silver tier. We have other tiers after that, which go into smaller stocks, crypto, option trading, etc. But the introductory tier, silver tier, $9.99, where you get an amazing deal. We got innovation, focus on innovation and growth stocks, crypto, picks, updates, market strategy, commentary. And you want to check it out if you go to paulmanpilly.substack.com and you want to kind of like get a feel and sense for like, well, you know, what is this innovation, growth, blah, blah, blah stuff. For free, read the Substack completely free. All right. So an update on what is going on in the market. I just checked before turning the camera on, so I see that the market's down again. In other words, there's selling going on, but there's something about the selling that is really reminiscent of sort of like, I think it was about February of 2016. People may say, well, what happened in 2016? Well, if you were in growth stocks, and you know, this is something that I've been focused on for 10, 15 years. There was a crash in 2015. And it kind of extended all the way into 2016. And there was this grinding kind of like, you know, price action, which is what like made me, you know, put this X post out. Dean, you can put that up. Counterintuitive, but the price action, which has low volume and unemotional selling, like you don't really hear people sort of like screaming like, oh, you know, people talk about, you know, how the crash is so brutal. You know, you really don't hear any of that. So it's kind of unemotional, is bullish, very much like the bottoms that we saw in 2009 and 2016, where it was sort of like, just like, you know, it's there. These are low prices. Okay. When is this going to end? And then I followed this up with another X post. X, by the way, is previously Twitter. Saying that a new bull market is going to have new leading stocks. And part of what is going on right now is this kind of like a topping out of what in the old sort of like finance books. I got a couple here, which like this one. I mean, these are hard to find, by the way. Studies in stock speculation. They would call these the old leaders, you know, when as a bull market is turning over. The old generals, and Dean, you can put this X post up as well. The old generals that lead the new bull market are never the old generals. I mean, so there's going to be new leadership. So, you know, what's really led the market for the last about 10, 12, 14 years, FANG stocks, I mean, essentially, which turned into, you know, and bigger abbreviations, including more and more stocks, essentially mega cap tech stocks. And then there's been a big move in sort of like some number of pharmaceutical stocks like Lilly, Novo Nordisk. Those stocks have just gotten, you know, it's gone up like hundreds and hundreds and hundreds of percent for many, many years. semiconductor stocks like Nvidia. And then there's been like, all the companies that took advantage of low interest rates to borrow a lot of money, to buy back stock, to boost their dividends, to become dividend aristocrats so that people would buy them for their dividends. Because of course, with low interest rates, people are desperate for income. Yeah, if I'm right, well, the next bull market, which is beginning and unfolding, even as we're seeing lower prices, yeah, it's going to have new leadership. And which made me think of one last X post before I get into some of the other things I want to tell you about, which is that just remember, folks, as you go through this grinding sell-off, which is that bull markets are born on pessimism, grown on skepticism. Sorry, bull markets are born on pessimism, grown on skepticism, and mature on optimism, and finally die on euphoria. And right now, what you are witnessing is definitely pessimism. There's pessimism about interest rates. There's pessimism about inflation. There's pessimism about the government, about the elections, about what is going on in China. I mean, everywhere you look, everyone is focused on something negative. And so I would tell you that if you follow that market wisdom, which comes from John Templeton, it's actually the ingredients for a bull market, which you've got low prices, you got low sentiment. What sentiment? This is how people feel. You got low expectations. And then in the way that, I look at the world, and remember, I look at the world through demand and supply. We have high dealer inventory. What is this dealer inventory? We're talking about market makers. We're talking about investment banks. Well, who's been buying all this low price stock? I mean, if you're not buying, the vast majority of people not buying, because most people like to buy when prices are rising. So who's buying this? I mean, it's the dealers that are buying it. They've been buying it for some time. They're accumulating at lows. And then equally on the other side, whether it be mutual funds or hedge funds or family offices, well, they're the ones that are selling. So the customer inventory is low. So you take this combination of things, which is low prices, low sentiment, low expectations, and you put it together and you have the ingredients for a bull market. Why? Because when you have pessimism, when you have gloom, when you have negativity, pretty much any news can be like spun to say, hey, well, that's better than expectations. Or just, any kind of like little spurts of demand will get people to say, well, I don't want to miss out. I want to get back in. So money starts to inch back in. And then when you look from a macro perspective, interest rates have rocketed up over the last 2 years. I mean, 2 years ago around this time, interest rates were essentially zero. And today, short-term interest rates are 5.5%. Long-term interest rates are a little bit below that. But essentially, they've all gone up and they're now stabilized. And people are now saying like, well, it could go to 7%. I saw some headlines talking about Jamie Dimon talking about interest rates going to 7%. Now, they could go to it, but I would say for right now, interest rates have gone up a great deal. And the most likely outcome is that, they may not go down immediately. They're likely to stay here. Why? Because, well, we have inflation that is also sort of like steady stated between 2 and 3%. And then we've got low growth. So when you put all of that together, you've got now at least some certainties. People know, well, okay, interest rates are not going back to where they were in 2021. You're 0, 1, or 2%. Why? Well, because inflation is between 2 and 3%. And then we also know that without some catastrophic outcome happening in markets, in the economy, in the world, there's no real trigger for interest rates to go down with inflation between 2 and 3%. So you're kind of like locked in now into this world where we kind of know some things, certainties, which is that we know interest rates are going to be in this range, 5.5% for short-term interest rates, something between like 4.5% and 5% for longer-term interest rates. So now you can start to, like, if you're a company, if you're an investment banker, you can start to make certain assumptions, build sort of model sets around like, well, what does the next, whatever, 1, 2, or 3 years look like? And it gives you some certainties as to what you can do, which is why we are beginning to see sort of money starting to come in. Like, for example, today, a biotech company called Intercept Pharma was bought out for something like about $480 million. But still, I mean, it's $480 million that some other company has to have the guts, courage, conviction to go and be like, hey, we're going to take 480 million and go buy some company. And they're not dumb. I mean, they can see what's going on in the stock market. Why are they taking 480 million and putting it to buy a asset? This is Intercept Pharma. This is a stock that's really just gone down. Why bother? I mean, why not wait until next month or next year when it's even cheaper? Well, that goes back to what I was telling you, which is that there is now the beginning, the emergence of certain factors that people can sort of count on: interest rates, inflation, and we know that growth is fairly low. So bigger companies are looking at smaller companies and saying, well, my big market is flat, stagnant, or even negative. How do I grow? Well, one of the ways you can grow is you can buy a smaller company and sort of cut costs and incorporate them into your basic business, and you can sort of capture some growth in that way. So that's one way in which bull markets get started, which is that money starts to move from sort of like corporate treasuries and starts to buy stocks that are cheap in the market. The other and final thing that I'll mention, which is something, an indicator that I track all the time, is that the number of 52-week highs on the NASDAQ, and Dean will put this picture up in a second and leave it up there for like 2 or 3 seconds so people can see it, because it's a very particular thing that I'm talking about. The number of 52-week highs, has completely crashed, which is, in the way I see it, a crash in optimism, which is quite different to what you would see in a stock market actual crash. When the stock market is actually crashing, the number of 52-week lows, they spike higher. So in this chart, which you'll see, the red line is the number of 52-week lows, and the green line is the number of 52-week highs. So what you are seeing is the number of 52-week highs crashing down, which is a absence, a complete like lack of optimism, which is also associated with market bottoms. And I'm not saying that, today is the perfect bottom. It looks like, stocks are bottoming out one sector, one segment at a time. But nonetheless, a lot of the price action, a lot of the news, a lot of the mood is indicative of low prices where any number of market participants, players have incentive to come in and either push prices higher, like the dealers and market makers, or take advantage of low asset prices, like companies that need it for growth. So you put it all together, somewhere in the next, I would say, next 3 to 4 weeks, we're going to start to see a lot of the stocks that have taken an absolute hammering since July, because the price action was where, we had this big rally starting from May to about July. Then we've had this big drop down. And now we're sort of like burbling around the bottom as like any number of stocks are making 52-week lows. And then there's also just a lot of stocks that are not doing anything. And there's an old market saying that says you never want to be short a dull market. And this is a dull market. And this is a dull market after a pretty painful bear market, at least for our stocks. So things are looking good. I know people be like, Paul, you're crazy. There's all these reasons, but remember, it is bad news that makes bottoms. It is good news that makes tops. So there's plenty of bad news around, and that's why prices are low. But I told you, when prices are low, it's also quite easy to spin everything into something that is better than whatever bad thing that you were expecting. So I know this is counterintuitive, but nonetheless, I would tell you, if you're looking for a set of stocks that, in my opinion, in my judgment, are setting up to be among the leaders, among the generals of this new bull market, well, check out our portfolios at atgdigital.media and come back next week and I'll have another video. This is Paul saying bye.